here we are. Bitcoin has finally managed to get our second major breakout from our trend, which we kind of started off here at the very beginning of this year. It's been a really good year. It's, at the time of me recording in this time zone, the 30th of January. We have one more day until this monthly candle closes, and bam, take a look at this monthly engulfing candle. If we close anywhere around over here or a little bit higher, just even a touch lower, we will have this one monthly candle engulfing the previous 1, 2, 3, 4, 5, 4, 5? I don't know. Let me count this again. Sorry. 1, 2, 3, 4, 5. No, 6 previous candles within this one monthly candle. Now that alone, ladies and gents, requires a completely separate video. And if that's something that you want to see, bam, let me know in the comment section down below, because I want to make that, and if that's something which you think that I should cover for you guys, then definitely let me know. Throw up a like on this video as well, but we're not going to talk about that right now. It's not the end of the month. There is one day left, but whatever. Let's just talk about what's happened in the short term, because this is a really nice chart setup. You know, the last times that Bitcoin was able to pump up to the highs of this kind of rally, we didn't stay up, right? I mean, we made fairly quick ascensions, but we lost those gains pretty quickly as well. Now, this time, we're rising fairly quickly as well, somewhat similar to what we did over here. It's a little bit slower, which is a very good sign. It's showing us, it's showing us that this is potentially a little bit more sustainable, but what we also have is a situation where this is now the third kind of major time within the short-term trend that we have managed to punch higher. And on the daily time frame, we've got a really, really clear image, which is exactly what I've been warning you guys about. Bitcoin has been doing a lot within this trend lately. If you look at my previous like 4, 5, 6 videos, most of them I've mentioned in some form, either a lot or a little bit, that Bitcoin has had this very clear trend of kind of quickly rising up, followed by slowly rising up, followed by quickly rising up, followed by slowly rising up, followed by quickly rising up. And you can kind of start to see that here. There was one right down here, which I'm going to show you in a second. There was another one right here, which isn't so obvious on the daily time frame. And then there's one right here, which really looks like we've done the same thing now. In fact, today's high is higher than the high that we had right here. And if we manage to close anywhere above this wick, that's going to be a really, really strong sign for the market. And I also just want to point out that this does mean we're at $24,000, guys, basically, which is, I would say, a pretty high level for Bitcoin right now. I'm really, really liking what I'm seeing. And if we zoom in a little bit more, again, we can see very, very clearly that this is something Bitcoin has consistently been doing, right? I mean, we formed it right here as well, where we kind of managed to rise up a little bit right here, and then we slowed down, and then bam, we had another blast off, right? And then if we move the chart a little bit, we did the same right here. We managed to rise up very, very quickly, and then we kind of slowed down, but then boom, we had another lift off. And again, on the 4-hour time frame, it really looks like something similar happening again right now. So it's a great sign. It means that bulls are not letting the price drop. It means that bears do not want to sell their Bitcoin. And most importantly, what it also represents, which is the same kind of, what I think is important in these markets, right? A lot of people will be like, okay, this chart pattern equals this and that chart pattern equals that. But what I'm all about, and you'll see this if you're inside the VIP group and inside the Foresight Academy course, is that I want to really dive deep into why this stuff happens, right? It's one thing to just kind of memorize a chart pattern, but it's another thing to really understand the dynamics of the market. And ultimately, what we're seeing here with situations like this is that there's, a fair bit of selling pressure, when we kind of enter these ranges. That's why we get these quick little dips right here. But overall, what's happening here is that there's a set amount of Bitcoins that want to be sold off in the market. And as time goes on, those Bitcoin supplies are dwindling down. They're being sold, right? That distribution is happening. And when enough of those Bitcoins have been sold to where, we have the supply and demand issue, right? So demand's right here, supply's over here. I shouldn't be doing this like right next to it. So demand's right here, supply's right here. And so what we have when we kind of rise up is supply starts to rise because people want to sell. Demand kind of stays in the same level, but as that supply continues to dwindle, we reach that equilibrium. When we drop below that equilibrium, now we have more demand than supply. That's when the price can start to shoot up. And again, that's exactly what we're seeing here, because what we are in right now is pretty clearly a short or even midterm, dare I say, trend right now, which is upwards. And that to me strongly indicates that, I mean, we're in a little bit of a bullish rally. And so naturally, as soon as the bears are done selling off, we're going to be able to just continue rising up. I want to remind you guys that this was the main idea I was talking about when Bitcoin was down here. If you were watching my YouTube channel back then, and you were saying that, Guys, I want you to throw a like up on this video. Double check that you're subscribed as well, because again, this is extremely time critical, time sensitive content. And if you're not already subscribed and stuff like that, you are going to be missing out on very, very important content. And just drop me a comment as well, just telling me I was here when you said that. You know, because I want to see how many of you guys were actually here when I was continuously. If you look at all my videos throughout this range, so many of them were talking about how even though we had bearish setups, I was saying, guys, you know, like, it's kind of hard to see how the market could recover from here, but I really think we will. And I kept saying the same thing over and over and over. And of course, that is what ended up happening, which is very, very nice indeed. And now it's worth asking what might happen next. And so, you know, I've already covered this with you guys a couple times, but I want to talk about, you know, how we could look at a potential breakout point, just kind of measuring the move that we had previously, drawing it from the bottom of our current move, giving us a speculative target right here of 26,000, or if you draw it from the bottom of, you know, where we consolidated, that gives us a speculative target of 25.3, 25.4, which are really interesting price levels, because if we bring ourselves onto this chart right here, you know, 25.3 puts us very close to this resistance line that I had drawn, which if I zoom out, you'll see is actually quite historically significant, right? This is the high that we set on the 13th, 14th of August of last year, where, you know, we kind of topped out right here and then, you know, fell down by quite a bit. I mean, what was this? Within a 3-week time frame, we lost a quarter of Bitcoin's value right there. So definitely quite a strong sell-off. And, you know, 26K, you know, just kind of above that resistance level, which I think is really, really promising, because, you know, we found resistance where I was warning you guys we would at the pre-FTX high. We found resistance again where I was warning you guys about between 23 to 24. And by the way, I was telling you guys, I don't know why people aren't talking about this resistance level, right? I mean, everyone was looking at this level. Everyone was looking at this level. No one was really talking about this level. But this was quite an obvious area of resistance. If you were regularly watching this content, you're going to know about it. I was pointing out this high, pointing out all the support, resistance, and general consolidation within this box right here. So it's no surprise that we started to struggle here, but it's also great to see now that we are starting to peak above it. Because if you take a look at what happens above this green line, I know it looks yellow right now, but it is a green line. You know, it's very, very clear when Bitcoin has been able to get above this level, good things have generally happened to Bitcoin. Now, we have had a couple fake outs, right? Look at this. We have had a couple fake outs. But what we did see is, again, like right here, a pretty nice rally. Right here, not so much, but the next two times, look at that. We had really, really nice interactions with this level, and we even came down to find support here, flipped it as support, and then rallied up to set our high. And then we even found support again on the way back down. I think this is a really strong position for Bitcoin. This line itself is going to be an important level of resistance. We might not be able to break it, and if we don't, I'm going to be expecting that we come back down to this low right here, which basically just means we're still in a sideways trading range. If that happens, this will actually look like a deviation, and then we'd kind of be back in this range, and it would be potentially quite quickly that Bitcoin might end up dropping down. This, unfortunately, would make a lot of sense for Bitcoin, and I want you guys to be staying aware of that, because we're not getting that really, really quick, snappy breakout right now. Like I said, it is a little bit slow, and that's a good thing, because it means that we're kind of moving in a slightly more sustainable way, potentially, but what I think is still important to note nonetheless is that, yeah, we are in a situation where if we do kind of form this kind of deviation just up here and then fall down, it would actually be very much in line with what Bitcoin, you know, kind of always does, right? I mean, you know, I think a great example would be this high right here. Bitcoin managed to set this high, came down, consolidated, bam, breached the high. Looked very promising that we were going to end up hitting the next high right here, but all this turned out to be was a deviation, and then bam, the market continued to fall lower. Deviation, swing failure pattern, many, many different names, but they're all meaning the same thing, which is basically that we push above our range high. You know, we basically get a lot of people trapped in long positions, so on and so forth, and then the market collapses down. And again, I think that's a real possibility. I know I don't look at volume too much, but volume is not on our side right now. It's not the most important thing, but it's still something to be aware of. And ultimately, I mean, what we're looking at are characteristics, right? I mean, in the same way that I kept on telling you guys that Bitcoin has this very classic chart pattern of, you know, fairly quickly rising up and then slowly rising up and then quickly rising up. What I was doing here was I was outlining a characteristic of Bitcoin. I was talking about how Bitcoin generally tends to repeat the same thing in its market, whether it's on a short-term time frame or a long-term time frame or whatever the case may be. And, you know, I broke down why. It's basically because people are, you know, a little bit too bullish. They don't really want to wait for the price to come down. They want to jump in the market. It's just fear of missing out. It's greed. It's euphoria, whatever. You know, it doesn't matter what label you give it, but it comes under the same umbrella. And in the same way, I'm warning you guys that Bitcoin loves to perform deviations. And right now, I think the risk of that is really, really high. If we take a look at the fear and greed index right here, like I said before, we are in greed. Let's see if we're still in greed. Yes, we are still in greed. We've been kind of fluctuating from 55 down to 52, now back up to 55. Let's see which ads I have today. Look, I've got very normal ads today, no lingerie. And so, yeah, you know, I mean, a reading of greed here, obviously not quite what we want to see. This will update in 3.5 hours, and I'm sure it's going to, yeah, I mean, we might even be at 60, guys. So the risk of a deviation is so fucking high right now. You know, and I really, really want you guys to be keeping an eye on that. I also want to look at the funding rates right here, because I think this could be some quite interesting data to just keep an eye on right now. Let's just take a look at this in the past 24 hours. Not funding rate, sorry, long and short ratio. And we do have majority longs everywhere, from retail to top traders and on Bybit as well. So I think that this is definitely a sign that, you know, some sort of a bull trap could be emerging here. You know, whether that takes us significantly lower, I don't know. But, you know, put it this way, if we do end up punching a high, it's a little bit too early to form a Fibonacci retracement right here. But if we do end up punching a high right here, you know, and then coming back down for a 618 retracement, like around here, right at the bottom of our range, which is very, very strong support, and we didn't even come back down to retest it, that would make a lot of sense, right? I mean, you think about how people would be feeling if, you know, the price falls all the way down here. You know, it's one thing for us to talk about it now when we're sitting all the way up here, but if the price actually falls down here, let me help you visualize this real quick, because I think it's really helpful to actually just kind of look at what this would actually form in the market. So what I'm going to do is I'm going to form the same Fibonacci right here. You know, we're looking at this 618 level, so I'll just drop a horizontal line here. We don't actually need the Fibonacci anymore. And then all I'm going to do is I'm just going to take this bars pattern tool right here, and let's take the sell-off right here, and let's just say we repeat something a little bit like this, right? Because that's basically what we'd be looking at. You know, if the market ended up doing something a little bit like this, you know, I think that a lot of people would lose faith. I mean, this would look like a very, very classic, you know, everyone would be saying, oh, this is a liquidity grab, oh my God, I can't speak, a liquidity trap, a liquidity grab, you know, whales have trapped us, and, you know, the institutions are against us, and, you know, you just unload some FUD, Russia bans Bitcoin, China bans Bitcoin, India bans Bitcoin, whatever, it doesn't really matter, you know, Elon Musk says it's too expensive, it's bad for the environment to mine it, it doesn't really matter, it's all, you know, cyclical, it just kind of, you know, gets recycled, you know, but ultimately I think that narrative could come back with some sort of deviation like this. And I think it's also important to note that it could end up happening this quickly, right? Where we kind of fall down, find some support for a little bit, the support collapses, and then bam, we drop down to our next area of support, and then bam, we drop down to our next area of support. This fractal that I've drawn actually looks really, really realistic. And I don't think that's a surprise. I don't think that's a surprise, right? Because if we look at this high right here that we had, I mean, what did we get back here? Again, it's the same thing. We got I don't want to call this a deviation. I'm being a little bit too generous by saying that word, but just for the sake of argument, just to make my point, we got a deviation up here. We set our high right here, deviated above it, and then fell right back down. So, you know, it would be no surprise if we follow that kind of characteristic again now, but keeping in mind that I think it's still quite possible that we get, you know, a major kind of bull rally, even with retracements. And I think it really wouldn't be too out there to, you know, kind of zoom out on this chart and be like, hey, look, I mean, you know, this has been a really, you know, brutal bear market from our high down to our low. It took us more than a year basically to set that low. Did it? Or maybe like exactly a year? Yeah, I mean, around exactly a year, maybe a touch over, depending on which low you're drawing it to. Obviously, this would be the low right here. So about 371 days really doesn't matter. It's very small differences at the end of the day, but super slow, super slow to set that low. I mean, we compare this to what happened back with this high right here, and we look at how long it took to set this high. Oh, actually, this was the same time frame. Wow. Wow, well, that kind of says something, doesn't it? Well, in my head, this was a lot slower. A lot faster, but apparently not. Very, very similar time frame. You know, and ultimately, what I think that means is, you know, given that it's been so long, and given that we haven't really had a big kind of, you know, take a look at this, right? When the last when the last bull market ended, we crashed down massively. We didn't get this. We didn't get a blow off top, which was one of the real reasons that, you know, I was like, I don't really know, like, you know, it was hard to analyze it really at the time. You know, but then you take a look at our reaction rallies. Bam, 97%. Bam, right here. 51%. Bam, right here. 45%. Guys, take a look at this. The biggest reaction rally we got during this downtrend was this one right here. If we draw this, that was 47%. We formed two right here. Look at this. We formed two huge reaction rallies, one of which was like double of that gain, and the other one was like roughly equivalent. You know, and within our market so far, we haven't even formed one that's bigger than this. You know, it's been a very, very brutal bear market. So even if you still think we're bearish, I think it would make a lot of sense that we come back down, do something like this, and then maybe continue rising up. And it would make so much sense, given that the market loves to form its 618 retracements, right? We love to come down to these 618 Fibonacci levels and you know, bounce off them it would be quite a clean setup for the market to wash out some of this excitement, let things like the fear and greed index reset, let things like the long and short ratio show us majority shorts, especially for retail traders, and then continue the climb higher. The markets always cause a lot of pain, and it sounds really realistic to me. Now, that might not happen, and if it doesn't happen, I still think that there are huge opportunities in the market. I want to talk about what they look like as well with you. Before I get to that, though, if we do end up dropping down, this is a huge drop. From where we are right now down to this low is a 20% move. I think that trade setups here are starting to look quite appealing. People that are looking to take on shorts, including myself. I definitely, don't get me wrong, I'm pretty fucking bullish here, and you're going to see why in a few minutes. But, if you're looking to take on shorts, this kind of area does make some sense. I think it would be quite easy to set a stop loss. You wouldn't have to go much higher than where we are right now. So you could keep your risk to reward really tight and then end up dropping it down, right? So if you take a look at this again, I just want to outline this and kind of see what it might look like, because this is something that I've been considering. I was talking to one of my good friends, MoXBT, who also makes YouTube videos on this stuff occasionally. Go check him out. He's been interested in a short for a little bit. And, if we end up taking a look at, kind of what the setup might look like, where's the long and short tool? Right here. Let's say that an entry might be like a touch higher. Stop loss, again, you wouldn't have to make it too wide at all. Or at least I wouldn't have to. I think that, just kind of, if we sweep this high, and I'll show you why. Take a look at this. I feel like this is actually kind of... I'm spoiling the analysis I was going to get to in a little bit. But I think that if we break this line, we should have a quite easy rise up, because there just isn't really much going on in this range. Like back here, really not much going on. And historically, by the way, if we take a look at this range all the way back to our initial breakout, it was this level. Like, look at this. Look at how perfect it is. If I replay the chart back here, switch it onto the 4-hour time frame, look at how perfect it is. We're doing the same thing, guys. This is the same range that we've just been finding problems in as resistance. I don't draw these lines for fun. These lines make a lot of sense. Guys, smash up the likes if you're finding this multi-year analysis to be useful. So far, I've shown you precisely 0 indicators on this chart. I'm not coming on here. Guys, I see YouTubers coming out here with, like, really weird, like, fucking spirals and, like, curved lines and all sorts of just crazy shit going on the chart and really weird indicators. And I'm like, yo, chill, take a fucking step back, study the basics. They will get you much further than most other forms of analysis will. They really will. They'll get you much, much further. The only reason you see people throwing completely whack stuff on the chart is because they can't do core analysis very well. And if they can't do that, they start supplementing with a bunch of other stuff, and it doesn't work, right? If you like, it'll look beautiful in a YouTube video when you're doing historic analysis, but when you actually apply it to the market in real time, to what we're doing right now, which is exactly what you get on this YouTube channel, you'll see that kind of stuff doesn't really work in practice. I don't really know why. It's just, I guess, not very reliable. But stuff like this, really, really simple, just straight lines, for fuck's sakes, and boxes are very, very reliable. And if we take a look at what happened previously, as soon as we managed to get above this line with some conviction, bam, we got a really, really nice breakout. It didn't actually take long for Bitcoin to pierce this level. It took about a day to rise up by a further 6%. Which is why I'm saying that if we just manage to get a little bit higher above this level right here, that's where it could make sense to set a stop loss. Even, I don't know, 24.3, a lot of the a lot of the risk would be gone by then. So if we take a look at this chart again, and I'm just very, very curious to see what this might look like again. So that's why I'm doing this, just basically for myself as well. 24.3, it's about 2% away, but the potential reward here is enormous. If we, I've already got the tool right here. Anyway, I like this one more, so we're going to keep this one. And let's zoom out even more, and take a good look at this. Let's move this out of the way. First target could definitely be around here. That's a 5% move, which is already a 2.5 risk to reward ratio. Pretty good. That's definitely good enough to trade with. But, stretch it down to this support level down here, the FTX high. And now we're looking at a 12% move, 6 risk to reward ratio. Stretch it all the way down to the level that I've been talking about over these last few minutes. And now you've got an 11 risk to reward ratio trade at a time where, I'm not trying to say that I'm bearish. Someone's going to take this out of context. I'm not trying to say that I'm bearish. I'm not trying to say that I think this is a good position, but it's definitely one that I think is looking fairly appealing right now. And that, that's the kind of thing that I like to see. This is the kind of thing where I'm talking about a short position. People are like, what the fuck are you talking about, Sammy? We're rallying up. We're looking really, really strong. That's the point. That is the point of this YouTube channel. If there's anything you take away from this YouTube channel watching it over the last few years, it is that I don't agree with the masses. I'm not here to hold your fucking hand. I'm not here to get in a circle and agree with you and pat your back and have you pat mine. I don't want agreement with you, you being the general public, not necessarily you specifically. because the general public, the 90%, get things wrong. So I'm really, really liking that setup. That's a really, really nice trade. And if you guys are interested in trading, I want to let you guys know that I'm also running a little bit of a giveaway right now where anyone who deposits at least $1 onto Bybit right now, using my link in the description down below, you're going to be entered into a giveaway where I'm English again, going bad. I'm very excited. Where I'm going to be giving away $1,000 for free to one of you guys. So go ahead and check this out if that's something that you think you'd be interested in. Sign up to Bybit using my link, make any deposit amount above $1. And if you are interested, head on over to the Rewards Hub, which is also available on your smartphone after you sign up. And you can get up to $30,000 in deposit bonuses. You can get much more, small ones as well, but you have up to 30K, available up for grabs when you take advantage of that and start depositing and trading, which is a huge bonus because that is free money. Again, just to put this in perspective, let's just roll with 5K, because I think that's a much more realistic number. A 20% move with that kind of, see, that was a 2% loss, right? So I'd comfortably use 5x leverage, comfortably. 5x leverage on a 20% move is plus 100% profit. So that would double the $5,000, and that's free money, right? So that's a really, really cool setup. To be honest, I wish I could take advantage of it, but I'm pretty sure that wouldn't be allowed since I already promote them. But anyway, if that's something that you want to take advantage of, go ahead and check it out. Bam, this, by the way, leaks a video, so sorry about that. But if you are excited, that is an upcoming video that I'm going to be making. I wonder if you guys can figure it out. Let me know in the comments. But very, very cool offer. So definitely check that out. Like I said, huge giveaway. Just pause the video, sign up, make your deposit, come back. It'll take you like 5-10 minutes and you'll be entered to win that draw. And you know what? If you don't win, you're still on the best platform in crypto. So that's super, super cool as well. Now bringing it back here, like I said, I think that if we are able to rise above this level, yes, there are a lot of fake outs, which does make it a little bit messy, but I think that it should be a fairly easy rise up. And if we do manage to get above, up to this resistance level, that would be very interesting. Given that we've had a good amount of consolidation, take a look at this. Bam. I mean, like right here, this was 6 days. Right here, this was 7 days. It's not actually that far for Bitcoin to rise. Like you look at this breakout point up to the point that Bitcoin topped out, that was an 8% rally. If you look at where we are right now from our breakout point, which is around here, up by about 8%, it puts us above that resistance level. Now, we definitely don't have to pump that high. I mean, 6%, 5% is close enough. That could be where we top out. It would make sense. But take a look at the other legs we've had here. This was a huge leg. This was a 22% leg. If we get something like a 10% leg, a 10% leg up, we're already above our resistance levels. And, let me just drop a line here again to prove this point. When Bitcoin has been able to get above this level, it's been really good for Bitcoin. Take a look at this again historically. I mean, basically nothing happened around these price ranges other than just a straight rocket ship up, which is really good for us because if we're moving up in this direction now, it means that we don't have any real resistance, right? If we're able to get above this green line right here, well, then it shouldn't be too difficult to get up to this green line and potentially much further above. It's actually the same thing I was saying to you guys when we were dropping, where I was warning you guys back here and back here that if we do end up failing below that 30K level, we didn't really establish any resistance on the way up. So naturally, we can't expect any support on the way down. That's why we had this quick wick here. That's why we had this quick sell-off here. And that's why in reverse, I'm expecting a quick move up as well. It could potentially be very soon that we're looking at $30,000 Bitcoin according to this. And it is only if we're able to clear these resistance levels. We've done the hard part. The hard part was back here. The hard part was back here. This resistance, I was saying from the beginning, I'm not expecting to be particularly difficult. So if we are able to clear it now, there really isn't much standing between Bitcoin and a $30,000 valuation right here, which is absolutely beautiful because if we take a look at where some of our support indicators are as well, look at this. We've got beautiful Ichimoku support, which like I said, I don't know how much validation I would give this because like I said, this would potentially look like a deviation if we even drop back down. So I don't really want to see that happening, but it is still interesting. EMA ribbons though, huge. I was pointing this out to you over the last few videos. As soon as these EMAs catch up to the trend, bam, we get our liftoff. Bam, we get our liftoff. Bam, we get our liftoff on the 4-hour time frame. Daily time frame as well, looking pretty decent. We're still far away. This is somewhat concerning. It would almost be nice to see a little bit more consolidation. So that is something that, I'm a little bit, and this just kind of comes in with that picture of, again, look, fear and greed's a little bit too high. Long and shorts are a little bit imbalanced. This is moving a little bit too fast, and that's reflecting with sentiment. That's reflecting with where people are literally putting their money. These are important things to be keeping in mind, in my opinion. There are these signs that, we might be going a little bit too quickly right now. And so that's something that I really want you guys to be aware of right now, because I think a lot of people are going to start getting swept away with the emotions, with the excitement, in this market. And that's exactly where your boy steps back in and says, hey, let's get our serious cap back on. Let's make sure that we are being reasonable and logical, that we are being realistic and grounded with our analysis. That's exactly what you're getting when you come here, so that we don't get swept away with the excitement too. We want to make money off that excitement. We want to, we want to be the sharks here, and I think this is, definitely a great opportunity to take advantage of stuff like that. What I think is interesting is, today, was a Sunday. Yesterday was a Sunday in my time zone. The dollar wasn't really like moving at all, but it is still at the support level. It's really spending its sweet time down here. Does that mean it could drop down again? I don't know. I'm just pointing this out to you. If it does drop down, we are already at the support level. We're not getting a quick bounce, that's for sure. Generally when we do hit support levels like this, it makes sense that we get a quick bounce, right? That's what happened previously. We've spent so long down here. Take a look at this. We set our low, and the very next day we started trending up. Right here, we set our low, and then we just kind of recovered up and then continued to slide down. Extremely bearish. The only caveat I can give you guys with this analysis is that this is the daily time frame. The weekly would make a little bit more sense. Even the monthly would make a little bit more sense. So maybe we didn't spend enough time down here yet. But I do still think that this is an important thing to be keeping in mind. S&P 500, you already know the deal, guys. We were talking about this on the YouTube channel quite extensively. Has already got its breakout. Wow, I didn't even see this. The S&P 500 actually got a retracement too. How did I miss this? It got a retracement, gap down, bam, got that lift off right there, and already well on its way to my next target of 41.20 up to 41.70, which again, if you've been watching this channel for the last few months, you're going to know I've been looking at consistently. One of my favorite things about doing this, right, is as a YouTuber, it's kind of frustrating because I'll be saying stuff that to me makes a lot of sense, but you won't actually see that come into fruition, if that's the right word, until much later. So I'm kind of just having to repeat some of it until it actually happens. But when it happens, all of what I was saying previously feels like it was so worth it, because ultimately I'm not like, if you look back at the videos, I'm not actually changing my perspectives very much. They're generally not changing, right? Different bits of analysis, different bits of data do come up, and I'll be like, hey, look, this is a possibility, and here's how possible I think this might be. And that's what I do when I make videos that are counter to my main idea. Because, guys, I'm an analyst. That's my job. I have to doubt myself. I have to be a scientist about this and try and disprove myself. But ultimately, the main story stays fairly consistent, and we're seeing the result of that right now, which is very, very rewarding. And I hope that you guys do appreciate this. This kind of analysis is the kind of thing where you've got to really. I'm not bringing anything new to the table. I'm doing very, very traditional analysis. I'm not doing anything crazy. Up until this point, like I said, basically no indicators until like 20 minutes into the video. And now I've only shown you 2, and I'm not going to show you anymore. That's it. That's all I have to show. I lied. Actually, I did show you volume earlier on. My bad. So ultimately, the analysis is very, very straightforward here. It's just a case of, letting it play out. A lot of people, they really glorify, they really romanticize what it means to be a trader, what it means to be an analyst. But ultimately, your job as a trader and an analyst is to do your analysis and then wait. And, in between, while you're doing the analysis and during the waiting period, that's where you're spending time with friends, with family, you're hitting the gym, you're just working out. The best traders that I know, the actual best traders that I know are fucking weird guys that just sit in their basement all day and have absolutely zero life, and just super fucking socially awkward people. But the next best traders that I know, the ones that still make a lot of money, they're the people that are always constantly focused on self-improvement, that are living good lives generally, that are having fun in their lives and stuff like that. And you can, you have to do stuff like, unless you fall into the first camp that I mentioned, you probably don't even watch these videos because I probably sound like an idiot to you if you're one of those guys. But, if you're more like me, if you're more like the other guys that just kind of like, you want to make money, but you want to have a good life too, then, this is the kind of thing that is really, really important, is to keep yourself occupied until the moves happen, because otherwise you start, there's no reason to be trading in a range like this right now. In a range like this, or in a range like where we are right now, it's dangerous. There's a very high risk of losing money. Where we are right now, like I said, maybe for me, it's starting to make a little bit of sense for a short position, but especially back down here or in these kind of ranges, it didn't really make sense to be taking trades, simply because the very, very high risk zones. But if you're just kind of setting your analysis and then waiting for it to happen, that's where you're going to make a lot of money. A lot of people feel like the more buttons they click, the more money you make, but generally that's going to mean that you lose more money, right? I would rather, there's a lot of people that are be making like 15, 20 trades in a month, and then there's me that, for example, it's not true, but for example, I might make like 1 or 2 trades in a month, and it depends. There's no average to how many trades I make, because the market conditions change a lot, right? I think like I don't think I made any trades in this range actually, which thank fuck for that. Maybe I did, I can't remember, but very, very few. And, and ultimately what you'll see is that these people will take like 5 steps forward and then 4 steps back. In a best case scenario, usually it'll be like 5 steps forward and then 6, 7 steps back. But if they're constantly just, leaping forward and then leaping back, but leaping back a little bit less and just kind of inching forward like that, it's kind of the same as the guy, or usually much worse than the guy that just kind of is a little bit more conservative, a little bit more careful with where he or she places their money. And generally they turn out to be much more successful in the long run. I don't make the rules. This is just how it is. You can look at the data of historic great traders, whether in crypto or outside of crypto. You can read books like Market Wizards, which are linked in the description down below. And you'll see that it's always the same case. It's always, like, all the best traders trade like that. Again, apart from these exceptions of the guys that are just fucking gifted, or have been like coding engineers since like age 8, and now they've just made some like killer bot that completely outperforms everything, and stuff like that. Obviously there are fringe exceptions like that, but for the most part, the traders that are actually quite successful, they're super laid back. You have to be. So if that's something that you're interested in kind of looking at a little bit more, I'm not saying that I am that person, but I certainly try and be that person. You can join 𝗬𝗪𝗡 VIP by following this link in the description down below, and then clicking on my name and clicking on send message. Super quick, super simple. It puts you in a direct chat with me. If you want to gain access to my 𝗬𝗪𝗡 Academy courses, where I'm teaching you everything I know about trading as well from A to Z, these same steps will apply. And if you want to take advantage of this huge bonus on Bybit up to $30,000 with the rewards hub right here, go ahead and check that link out in the description down below. And I want to remind you guys again about that deposit bonus, because any deposit above $1 will enter you into that giveaway where you have up to $1,000 to gain. Very, very cool. Huge bonus. Well worth checking out as well. It's not even a bonus, it's a giveaway. One person's definitely going to get it, and you don't have to do anything for it other than deposit your $1, and then you can never use Bybit again. That's completely fine. So definitely worth checking that out as well. If you guys have enjoyed this video, you know exactly what to do. Hit up the likes, subscribe, tick the bell, all that good stuff, and I'll see you all in the next one. Cheers.